Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, on with my good friend Stephen Dow. How you doing, sir?
I'm fantastic. And yourself?
I'm doing great, man. Do this, do that little marketing thing so you're protected.
Thank you again. Although I work happily for Velocity Mortgage Capital, all the topics and ideas discussed on this channel are that of my own, and let's get it going.
Awesome. So, hey, I want to talk about the history of rates and experience in lending.
Right.
Just so people realize, lots of new investors, a lot of people in the business are kind of focused on today, and they're using kind of today's environment, not appreciating that we have history to kind of look back on, right? So how long have you been in the lending game?
Started in, I'd say late 95, early 96.
All right, so let's call it 96. So you were in pre-bubble, you were in 96 was, what were do you recall what rates were?
I mean, I started off doing subprime specifically for a small little wholesale boutique lender up in Sherman Oaks, California.
All right.
And I remember there were different product types. One specifically were 125% loans. I don't know.
Oh my God.
Yeah. You had like Dan Deerdorf and Dan Marino doing commercials for.
Oh, I remember those times. Yeah.
Yeah. So, I mean, I remember 15% and higher. So it's cyclical. People have, very short-term memory when it comes to rates. They're just remembering the last 6 to 12 months of, wait a minute, why are you giving me a 5.5? That's so high. And historically, that's like stupid low. You know what I mean?
Yeah.
So it's just how long you've been following rates is really what it comes down to.
Yeah. The reason I want to talk about rates in history is, again, a lot of people in the game, if you've been in the game the last 4 or 5, really the last 10 years, rates have just gone like this, right? Rates have been higher, right? I did a 50-year chart on kind of the real estate market. One of the variables was rates. I think it was 1981. Rates were 16.86% for 30-year fixed first-time home buyers. I mean, that is just absurd, which really means if you were that person, you were probably paying 18 or 19%.
Right. I was going to say 16, they were probably like jumping for joy back then. They're like, wow, man, you must be A paper, right? 780 FICO.
Yeah. And the reason I want to talk about this is again, back in 96, people were still doing deals. Real estate deals were still getting done, right?
I mean, they've always been buying, selling something for the last almost hundreds of years. So yeah, financing real estate, it's always happening cyclically, so yeah, something's always going on.
Yeah. And the other thing that I've seen over time is as rates go up or go down, there are different lending programs that come along, right? Because again, there is a big part of the industry, banking, lending, that it's their job, right? To have money circulating, right? They borrow at X and they lend at Y and they make the spread. Right. That is a business.
Right.
And if the environment slowed down, for example, for a paper because rates went up 1%, they're going to think of a program to try to keep that money moving, right? They're not going to go, oh, we're over. We can't do anything for 3 years.
No. Again, as they say, necessity, breeds innovation. So whenever the market kind of, says we need something, or there's a particular underserved or space that somebody in a room counting beans says, you know what, we can do this to make money. So yeah, there's always some sort of innovation with different loan programs that come out. But then throughout the years with different regulations, then they get tighter. So there's always that ebb and flow of creativity, expansion, and then tightening up. Just depends on the market.
Yeah. One example I have is I remember when I was buying great deals, kind of, I'll call it 2010, 11. And, was surprised that the banks were saying no, right? I was like, what the hell? Why is a bank saying no? Then I went to a hard money lender, gladly paid 12% because it was 12%, 70% LTV. Right. So I was still bringing in 30%. That same lender was only doing those kinds of loans. And then lo and behold, by 2014, and they were short term, right? They were like 1 year, 1 year with a 6 month, with a 6 month, add-on or whatever they called it. Suddenly they were doing investor loans, right? Where instead of paying 12%, I could go get a 30-year loan at 7.9.
Right.
So again, that's just like when their money gets fatter and they're not lending it out at the same velocity, right? They'll just create a new program or project. So again, what I'm telling people is keep learning your market, keep doing the deals. I think rates are going to go up. They have to. We just had Jerome Powell today talk about tapering this year, but we're a long way from raising rates. I don't believe him. I think we raise next year.
Right.
But even if rates have hit the bottom and come up, you still do the work. It's always a great time to do a great deal.
Yeah.
And, sometimes you just need to look elsewhere, right? When banks say no, go somewhere else. And
I say yes.
Yeah, exactly. And for me, it was a bank. Then it was hard money. Then it was private money. And now we're doing deals with you, right? We have a couple of deals in the works already because it's just faster, easier. For me, the important thing was 30-year fixed.
Right.
So it's pretty good stuff.
Well, let me ask you a question. What do you think so far with the process of the ease of use, or are you having trouble?
No, it's been a pleasure to go this fast and this easy.
Okay, good, good. Just wanted to kind of.
I need this. Great, move. Pay for the appraisal. Check. Okay, great. That's all we need. We're waiting on the appraisal. I'm like,
yep. And as soon as that appraisal comes in, tell you what's next and what to expect, and boom.
Yeah. Sometimes easy. I mean, my like when I go do a credit file at a bank, like for one of my apartments, it's an ordeal. Right. It's not fun.
I can imagine. I mean, either with tighter conventional financing or other, alternative financing, they do tend to kind of make you jump through a little bit more.
Well, they want to put me in a box, and I don't fit in a box anymore. So
no, not at this stage. And again, as you evolve in your real estate or investing journey, you're going to typically need or appreciate somebody like, or my company, due to the fact that we don't report to the credit bureaus. Yeah. So that does help with other financing. If you're looking to, do other types of financing, it doesn't hurt your DTI. You can hold title as an LLC. Right. So there's so many different ways to kind of really help the self-employed, type borrower. So
yeah. The other thing I want to highlight for folks is there was an idiot out talking on CNBC today about how real estate is kind of all this interest rate sensitive, and he feels for people who buy and then, rates go up and values go down. What I really want to highlight here is, let's just say one of the loans that you're doing with me on the residential property and the value falls in half.
Okay.
You cannot call my loan, correct?
No.
That's the power of residential versus commercial.
Right. You're paying on time. What are we talking about? Even on the commercial side, we don't call any loans due. You're paying on time. The securitization is still, performing. And then if you go to sell, obviously, then you take the loss. But no, if you're performing, we're fine. Yeah.
And that's important, folks. So again, a lot of people are like, hey, if you buy today and values go down 5 or 10%, you're going to lose the house. That's not how it works. Yes, commercial financing at a commercial bank, there are covenants that say you must maintain an equity value and debt to all of that. But that's not how residential lending. They can't take the asset back in a residential loan.
Well, theoretically, typically the tenant that occupies the space pays enough to cover the mortgage. So unless you stop paying the mortgage, or you don't want, or the tenant stops paying you somehow, then that's where it all kind of, crumbles. But again, if you personally don't make enough money to cover the mortgage, then the tenant should. So
yeah. And again, it'd be very clear, right? Velocity Mortgage does not do owner occs. You only do investment loans.
1 to 4 unit, you cannot live in one of the units, but in an apartment building you can, and in a mixed use property you can live one of the units, but not in a residential. Correct.
That's cool. So again, this is just a talk about the history. I remember a question I forgot to ask. What was the highest interest rate loan you ever got done? Do you remember?
Ooh. Well, because again, I also dabbled in hard money.
That's okay. Don't qualify it. What was the highest interest rate?
Okay, 18%.
18%.
Right.
Damn. And again, the deal got done and the borrower was happy.
Happy as can be, like floating, just jumping for joy, because they needed the money to do something else with it. And if the numbers make sense, and if they really needed the speed and the efficiency and the ease of use was what they were looking for. So it was win-win for everybody. You know what I mean? So it wasn't like predatory lending. Oh, no.
They signed the line. You didn't hold a gun to their head, right?
No. Full disclosure about everything, brother. You know what you're walking into. So if it works for you, then it works for me.
Yeah, the highest I have paid was 12.9%. 12.9. I'll just call it the lucky 13. And I was happy as clams, right? I came in and allowed me to do. I actually did multiple loans at 12.9.
But if the numbers make sense,
that was the only option. It was either that or pay cash, and I didn't have enough cash to do all the deals I wanted. So I'll take the loan any loan I could get.
But it led you to this because you got into more doors that are more, that are cash flowing. They built up an equity. It was a win-win. So you looked at long-term. That's the one thing I love about you. All your numbers, the statistics, it's long-term. It's all history-based. So yeah.
Very cool. Well, this has been fun. How can people get a hold of you if they wanted to, talk about options and how they can use a non-QM lender?
sdow@velocitymortgage.com, right below us there. So
yeah. It's in the description, folks. I get 5,000 characters, so I've tried to put all the links to all my experts in the links below.
I know, I see that you cram as much in there with emojis, everything as much as possible.
Man, I paid somebody to do that. I paid somebody hundreds of dollars to do that. So go enjoy the description below. Thanks, buddy.
Thanks, man.